Good morning. Good morning. आज चालू होते हैं first. Right. So for IIP data, as we discussed that even in our case, it was MOSP or mostly.gov.in IIP data, right? So trade economics basically doesn't give IIP data. So for other countries also, you have to go to the respective websites. That is a possibility that can be done, no doubt about that. But please understand, not every country will be standardized as per our country. So for example, our people are kind enough to have a nice Excel sheet, downloadable Excel sheet. Is it a law that every country has to get that? Not really, okay? So we might fall short on data as far as IIP is concerned. So if you remember, I told you that it could be either IIP or PMI also. If you want more accurate, more in details, then it will be surely IIP. But if you just want to get an overall view, because finally for PMI also, you remember all these top executives, they are going to get it. And their understanding about the industry is not going to be completely opposite of what it actually is. So for simplicity, if you are not able to pull out data for other countries, you can also check PMI for other countries. And one more thing, like in the moment I told you choose other countries, just for you to get a hang of trading economics. But tell me in practical life, which country are you going to check in detail? Only India. We are not here to discuss how to invest in Russian markets, how to invest in European markets, right? So we are focusing only on Indian markets. And for that we have mostly our website. Okay, number one. Number two, what about the USA? The US also we need not dig down so much deep. Even we get an overview of what is happening there, that should be more than enough. And that is why I said for IIP, even if you check PMI, that should be fine. Okay, so US you are taken up. Anyone else? Anyone to Australia? No, for Australia? No? You took Japan. Okay. And what was your observation? GDP growth rate is only 1.1%, okay? Inflation is 0.9%. GDP annual growth rate is 0.7%. Show me your notebook. No, nice. I've seen that half size notebook after such a long time. And he's written in pencil, is it? Pen, black pen. What pen is allowed? Till one grade, only ink pen was allowed for you. Only ink pen was allowed till grade 4, 5 or something like that, or no? You started writing in pen in 5th standard. Okay. So you are 2 years experienced, 2 years experienced while writing with a pen. Very nice. Okay. So with that, one more time let me ask, how many of you have done the homework? Now more and more people have come. Many of them have done. Some students have come classmates. College में भी नहीं किया, अभी करेंगे. Okay, so as I mentioned, it was mainly to give you an overhang of how to check the macro level data. Because yesterday's focus, I'll quickly revise whatever we did yesterday in just 2 to 3 minutes. First, we started off our discussion with analysis. The word analysis is required in every walk of life. Yes, we talked about buying a car, buying a house, deciding a partner, every analysis is required. And then we said, why not stock market? Then we said that while we analyze, there are 2 types of analysis that have to be done. One is known as a qualitative analysis and one is known as a quantitative analysis. In qualitative analysis, we talked about 5 factors. Oh, was there a homework for qualitative? No. One class we correct. So for qualitative, we talked about 5 factors. When we started with what is the product and demand and future and a lot of many things, right? So what are the different qualitative aspects? The quantitative aspects, if you remember, I told you that we'll get 10-pointer theory. Did we discuss that yesterday? It's coming up tomorrow. Okay. Then we said that, okay, now we know how base analysis is to be done. Then we said what are the different myths about fundamental analysis. In myths, if you remember, we have discussed specifically 2-3 important points. The stock market is gamble and we know that it's not a gamble. Important point was what? We can always make money based on short-term news. But then we said we can easily leave the conversation by saying that it's a myth. But then we try to find out the solution also. What was the solution we can recall? Today, last answer. Anyone who has not answered? Please answer. Very good. So he said first check what was the event date and then at least check 3 to 5 days before the event what has happened. If let us say it was a positive news and the market has already moved up, then what will all these big people say? News has been factored in. Now you know what do you mean by news has been factored in? Okay. Assuming it was going sideways or bearish, then is there a great chance with the good news it can shoot up? Absolutely yes. Simple? Yes. After that we talked about various aspects of economics. After which we turn to economics, right? And economics we talked about different data sets that ideally we have to check. If we want to get a big overview, what kind of analysis is that one? That is known as an economy analysis. If you remember, we said there are 3 types of analysis that we want to do. One is known as a economy analysis, second one is known as an industry analysis, and the last one is known as a company analysis. Right? So when talking about economy analysis, do you think we have to do economy analysis every day? How is India performing today? Not required. Only once in a month. How much time did you take yesterday as a homework? 5 to 10 minutes, more than enough? Do you think from your busy schedule? You can easily take out 5 to 10 minutes for 1 month? Absolutely yes. So now that we have done it together once, now from onwards, try to repeat this exercise so that you keep on getting the live updates about what is happening in the economy. In fact, yesterday I read about the inflation news in lemons. Did you read it? So earlier some motivational speakers whom I heard, it happened in such a way that I was reading the news and some motivation lecture popped up. And in that the motivation lecturer was saying that if life throws lemons at you, I would make a lemonade or something like that. That is what he was saying. But then I said, if life throws lemons at you right now, wow, why not? What is the rate? It's almost 300 to 400 rupees per kg. And the inflation in lemons has been maddening. Now I tried to find out the reason why, what happened with lemons? Why lemons have become so expensive? So apparently one single lemon would cost you somewhere around 40 rupees right now. It has been that crazy. See, this is not about each and every state. The rates are different. Rajasthan, Gujarat, Madhya Pradesh. I was trying to pull out some data. And then I tried to find out the reason. One reason that was known was apparently in Gujarat, the production of lemons is pretty high. And there was a big cyclone in Gujarat right now. Because of which the lemon produce was not up to the mark, is what I read in the news yesterday. Okay. I can't remember reading about the cyclone, but it was mentioned in the news that there was apparently some natural calamity, because of which the lemon production got hampered a lot. Number 2, there's a rising transportation cost. And do you already know about this rising transportation cost? Yes, we discussed it yesterday. Crude oil. And the third thing they said, now I will ask you a question. Third thing that I mentioned in that article was that because of summer season, more and more people are demanding lemon also. With these 3 data points, that production got hampered in Gujarat. Second, transportation cost is high. And summer, the demand for lemons is also very high. What kind of inflation is this? More of supply side inflation, but it is also some kind of demand side inflation. So this can be the worst thing. This is also worst. Hello. Okay. I can be an electrical engineer. Hello. Okay, better. So I've have few friends who are electrical engineers, and we always चिढ़ाते उनको, ट्यूबलाइट वगैरह चली जाती है जरा रिपेयर करने. Okay, anyway, going back to our discussion. So this is a mix of what? Demand side inflation as well as supply side inflation. Can this be like pretty worse? Yes. Okay. So yesterday we have talked about inflation. Why inflation? We did talk about supply side inflation. And if you can recall few examples, we talked about that palm oil. Remember, we talked about soya oil. We talked about sunflower oil. We talked about crude oil. All these things right now. Do you remember what was inflation in India which was declared last month? 6.95, almost 7. If you remember, in US also we checked out the inflation and that was highest since almost 1981. So the whole conclusion that based on IIP, growth, GDP growth, PMI, inflation, based on all these points, whatever conclusion we tried to make up yesterday, the conclusion was that there is a great chance that India as a country might do well, again maybe, but where is the problem? Problem will be on profitability. Revenues can go higher, but expenses will be much more higher, and that is the reason why final profitability will get hampered. Is this okay? That is what was about yesterday's discussion in a nutshell. Going on with today's discussion, I told you that today we are going to start off with few more economy related parameters, but then we will be switching on to industry analysis also today. Okay, so industry analysis is also going to be pretty interesting. Because right now we are trying to understand whether we have to invest right now, yes or no. If yes, which sector would it be? Okay, are we talking about company specific information right now? No. Company specific information we will start in the second half today, slowly today. Right now we are talking about economy level. Okay, so there are 4 parameters which we are going to discuss back to back. If you check out in your notes, the very first one you can see is CRR, that is the cash reserve ratio, followed by SLR, which is statutory liquidity ratio, followed by repo rate, and followed by reverse repo rate. Four points you'll see in your notes. Okay. Now, all these 4, if you want to understand in detail, again we'll take quite a long time, but still I'll try my best to do that. Okay, to cut it short and to give you the main gist behind that. What do we mean by CRR? Cash reserve ratio. Okay. So cash reserve ratio means every single bank, be it State Bank of India, HDFC, ICICI, Axis, whatever bank you, every single bank has to keep some money with RBI. Okay. They have to deposit some money with RBI. Now, why does RBI say so? This is like a safety measure that RBI is taking. Could it be possible that some news comes up for the bank and all the depositors say, "Arey, something might go wrong, we want our money back." You might have seen such things happening in case of cooperative banks. Some news floats about the cooperative banks and then the news comes up, 1 kilometer line outside the cooperative bank. Depositors are running on the bank to withdraw their money. To avoid such a situation, or even if such situation happens, so that banks have some liquidity with them, banks have some money with them. That is the reason why this cash reserve ratio and statutory liquidity ratio is defined. Both sound similar. Cash reserve, keep cash as a reserve. And second one is statutory liquidity. Liquidity means again what? You have to maintain it like cash. Liquidity means not in the literal sense liquid. Okay, liquidity means it has to be in cash or easily convertible into cash. Okay, then what is the difference between CRR and SLR is that for CRR, you have to maintain it with RBI. Money has to be kept with RBI. Statutory liquidity ratio, money has to be kept with the bank itself. You are not allowed to use that money for lending purpose. You cannot give loan with that money. Okay, first let's understand. I did 2 lines for that also. Just a summary. Now, this statutory liquidity ratio, SLR or CRR, is generally declared as a percentage. So let us say 4% is the percentage for CRR. Assume that bank has 100 rupees. Out of 100 rupees, now you tell me, out of 100 rupees, 4 rupees they have to keep with RBI. In simple words, now they are left with only 96. They will not be able to give more loans. Maximum loan that they can give is 96. Assume that on top of this, RBI says additional SLR will be 3%. SLR will also be 3%. Again, 3% of 100 again. Of whatever money originally they had. So now 3 rupees with RBI or 3 rupees with itself. 3 rupees with itself. Can they store it in the form of gold also? Yes. Now again, as per the RBI rules, they mentioned they can keep it with themselves in what form? In the form of cash or in the form of reserves or what? We need not go into that. What do you have to understand? Will they be able to lend that money? No. So total how many rupees for SLR 1? For SLR 3. For CRR 4. So out of 100, 7 or 1 will be able to lend only 93. Okay. Now again, you will be asking, ma'am, you gave an example of 100, but what is that 100? What do you mean by how much money they have? Again, if I go into the technicalities, it's percentage of NDTL. Okay, net demand and time liabilities. Again, we are not here for CA coaching. No one will ask you to calculate how much is CRR and how much is SLR. Percentage will be given. You are not the auditor of the bank to check whether the bank has kept that correct amount of NDTL or not. Who's going to check that? The auditor is going to take care of that. What do we need to understand? We need to understand what is the meaning. What is CRR? What is SLR? CRR is the money which has to be kept with the RBI. SLR is the money that they have to keep with themselves. Now tell me logically, our government says we are increasing the CRR and SLR rates. If CRR and SLR rates are going to be increased, I want an answer from someone who has not answered till now. Is this a good sign for the bank or is it a bad sign for them? Bad sign. What a bad sign? They will not be able to lend more and more loans. If less loans are given, interest earned on loans will be less. For bank, what is the main income? Interest earned. So interest earned will be less. If interest earned is less, obviously the final profitability will also be less. Are you understood this interpretation of CRR? Are you going to check the calculation? Not at all. Actually, you have to check. What is the current CRR number? What is the current SLR number? Do we also check the trend? Why not? Then how much was CRR historically? Last 3-4 data points. Is it increasing? Is it decreasing? We can check that also. So if you want to write down a 1 or 2 liner for CRR and SLR both. Okay, there in the notes, but just as a combination, this one of the important lines. Write down. CRR indicates the amount of money that the banks have to maintain with whom? With RBI. Whereas SLR, who can tell me for SLR? SLR is the correct. So SLR is the amount of money that has to be kept with the bank itself. Has to be kept with itself. Again, which assets again will depend? Could be cash, cash, could be gold, could be government bonds, depends. Okay. So shall we check how can we check what is? Sorry, I did not get you. Sorry. Entire economy also. Now you need to tell me if they can give lesser loans, supplies comparatively less. So overall economic activity can dry down. These are majorly related to banks though. So if you want to understand the overall economy, generally SRR and CRR will be given comparatively lower weightage. Comparatively. Okay. But finally, as I mentioned, if CRR and SLR dramatically increased, will it impact the economy significantly? Yes. But our ministers will not increase it like just like that. Okay. There will be a lot of thought process behind it. So if you see here again, which website? Same one website. I'll just first quickly show this and then you can ask questions. Can you see the CRR? Yes. What do I just click on that? Once I click on this, I'm just scrolling down and what can you see? Almost the same. At what percent? 4%. Since almost June it was increased slightly. From June, July till April right now. It's almost same, 4%. So generally, by the way, there is one more event called as the monetary policy, if you have heard about this. In monetary policy, all these rates are declared. The monetary policy has to be at least 4 times in 1 year, minimum. 1 per quarter, minimum. Can there are more such rate hikes? Yes. Can there are more such meetings? Yes. What is the minimum? Okay. If you can see here, somewhere around January 21, it was 3%. Why could the governor have said, let's, earlier also it was higher. So if I now take it to 5 years data, see here also you can see 2018, can you see this visible now? 2018 4%, 19 4%, 20 also 4% is up, reduced. 20 to 21 almost, 21 plus first half also almost, was at 3%. Now why do you think it might have been lowered? So that they can give more loans, and because of the pandemic, was the economic activity dried up a little bit? Yes, to boost that, the CRR was lowered. Absolute logical? Yes. So unless and until there is a dramatic jump, we need not consider this. We just need to know what is the current scenario. If it is somewhere around 4, it means normal. Nothing special to be analyzed. Any further doubt? Yes. No, wait, she had a doubt first. Clear. No, mutual funds, do they have to keep CRR SLR? NBFCs. No, so NBFCs rules may be a little bit different. And then there is a separate act, but they also have to adhere to RBI norms also. So there could be some minor tweaks, but they also have to maintain such ratios. The person, insurance companies can be against I tell you. For banking, it is all these monetary policies is that plus you have a banking regulation act. For insurance, such rules might apply, but you have a separate insurance act. For NBFCs also you have a separate NBFC act. So in some cases, the acts might override these policies. But again, this is like we are going into too much of depth, not required at all. Okay. So right now, just understand that yes, majorly banks and NBFCs, insurance also not much. They don't have to maintain all these CRR SLR thing, but they have to maintain it in a different form. Okay, liquidity is required for insurance, but the name is different. It's not governed by the monetary policy decisions. Okay, okay. No. So she's asking, and government of India, does the government also have to maintain some percentage like CRR with the central bank, which is RBI? Government, who is the banker of the government by the way? RBI only. So whatever money government of India has, it is with RBI. Good question. Does RBI have its own CRR or SLR? So to be honest, I don't know the exact answer for that. Simple reason for that, we have to check RBI Act. Why? This monetary policy CRR SLR that we are discussing right now, it's applicable for banks, not RBI, not bankers' bank, not government's bank. So if something is mentioned in the RBI Act, then they have to maintain, not as per the monetary policy committee. Okay? Yes. Yes. So every central bank will have some foreign reserves, no doubt about that. But the question that she asked that is it mandatory that they have to maintain some 4%? Let us say, does RBI also have to maintain 4% CRR or SLR? That personally it's not the case because they have whatever money the government that it has, and they are not going to give. Who does RBI give loans to? The banks. Okay, and do you really think that banks' demand for loans will be higher than whatever money RBI has? I don't think so. Okay, because RBI is the banker of all the banks and the banker of the government. So we are going into hardcore economics now. She's like, oh my god. No worries. So she's asking, was there a case where RBI was in a need? Oh my god, I don't have enough money. I need to go and take a debt from someone. This is Sri Lanka's case right now. This is Pakistan's case right now. And this was our case in 1991. This is a case where the country was bankrupt. So whenever you are saying that RBI is not left with enough money, it means that government of India is not left with enough money. Why? Because RBI is bankrupt to government of India. So in 91 there was a scenario where our Indian government was left with only 7 days reserves. 7 दिन अगर ऐसे ही चलता रहता था तो इंडिया would have gone bankrupt. PV Narasimha Rao, he was the FM, no, he was the PM at that time, and Manmohan Singh was FM, finance minister. Lot of gold was sent to London. So now you are like, oh my god, now if RBI needs a loan, if a country needs a loan, what to do? Can they take a loan from someone? Yes. And who's that? Do you know the answer for that? Or, let's say you told me one answer, that's fantastic. That's the World Bank or IMF. IMF is an international monetary fund. So now you can imagine IMF or World Bank is like the world's bank. Like RBI is our government's, is our country's bank. IMF or World Bank is the name for this. It's the world's bank. So you can borrow from that. Okay, so now if you want an answer for that question also. So first question is clear. Second question is that इतना क्यों करना है? Why so much things are required? Why go to IMF? Why go to World Bank? Simple, print money. Give it to whoever wants it. But then what happens is that if you print a lot of money, if you just give it to anyone and everyone, then the value of that currency drops, and that will lead to more and more inflation. I have done, I should not say this for myself, but I have done a very good video because I am in love with that video on inflation only, and I have addressed this question of why doesn't printing money solve the problem? Because I had the question when I was in standard 10 or 11. Why don't governments say they don't have money? Print and distribute, finish, no poverty in India. Very basic question. Oh, we are the ones who decide to print money. We are the machines. Print and give to all the poor people. Everyone will be rich. Simple solution. But that is not the solution. Because if we print more and more money and if we just, so again say, supply more, demand is more or less similar. This will lead to decrease. The decrease in what? Decrease in the value of the currency. And that was the case where in Zimbabwe, this happened in Zimbabwe also. One loaf of bread was in hundreds of dollars. One loaf of bread. And a very similar situation is unfortunately happening in Sri Lanka also right now. I should take some extra fees for economics also, what I feel. Okay, yes. Yeah. Exactly. So is it the first time that this is happening? No, it has happened many times. And in fact, just for your knowledge, Sri Lanka itself has defaulted twice. This is the third time they will default. And what a statement. They said they are going to default, so that you can imagine they have taken loans from various countries. Okay, so bonds and all that, we are not going to go to that. Simple words, they have taken loans from various countries. So they said we default for everyone. We don't want to be a cheaper. We honor their commitment, we honor their, but we dishonor them. Rule is same for everyone, we default for everyone. So that is the case with Sri Lanka. Doubt. Okay, you got your answer? Yes? Did the country? Oh, then you are asking a question on politics. If Sri Lanka defaulted, then didn't the country take action against? Country take action against the government, nah? You asked government, right? The countries that have given loan to Sri Lanka, can't they take an action against the government? Even though the government, politics both. I'm not so good at politics to be honest. I guess there's just one family, you know the answer? Okay, that is true, but the name of the family? Rajapaksha. And that one family is controlling the entire country for years together. I was just reading about that. The Rajpaksha family, so there's one person, his brother is finance minister, another brother is sports minister, another nephew is this minister, another niece is that minister. Whole country run by only one Rajpaksha family. No one dares to talk against them. Yes, correct. First one person got appointed as president, he appointed his brother as prime minister. It's amazing. Fantastic. They changed the constitution only. Do you feel better we are staying in India? Yes. Now what can happen is that, so just to answer your question, can't the country take any action against Sri Lanka who had given a loan to them? So there is a port in Sri Lanka, Ambantota, that port, and for that China had given a loan to them. China is very smart. They give loans only in those cases where they know there will be a default. Yeah. What nonsense strategy? People generally give loans where there will be a repayment. They generally give loans where there will be a default. Why? So that they can capture it. So now Ambantota port is now as good as captured by China. Whatever. So see, on paper, so this is no politics that we are going into, geopolitical issues. I'll just give one simple example. You are just watching this completely. Very similar cases happening with Pakistan right now. And again, one economy collapsing, the other economy collapsing. All these weaker economies can really go for a toss. And I genuinely feel that how we are placed right now, we are way too stronger as compared to any other country right now. Even if GDP growth rate is slightly reducing, still we are much better than our peers. So again, we always undermine the government. Government क्या करता है? हमारा government बेकार है. Okay, but then if you see other countries' governments, then we should ideally be better at least. Okay, so a lot of economical and political discussions are done. Have you understood CRR and SLR? Very good. Right, so CRR done. SLR के लिए generally you have to go to RBI website. SLR is not given on trading economics. Okay, so I'll just show you rbi.org.in. So this here, RBI website, rbi.gov.in, and if you just see on the left hand side, this is the home page, right? On the home page, first page itself, can you see policy rates, reserve ratios? If you just go downwards, you can see CRR 4%, SLR 18%. But this is also more or less similar. It's not very high or something like that. Again, SLR, if you want to check what have been the rates historically, again, you have many other websites, but I don't refer to a lot of websites which, something like this. I've given this as an example, numberbasket.com and all that. But as I mentioned, CRR, SLR are just quick rates to be referred, not to go down into details. You get this, maybe you can also have your own journal when you have written SLR. Right now it's at 18%. It has been similar only, not varied a lot. Okay, can we go on? Yes. Absolutely. Very correct. So I'll just repeat what he said. In simple words, how much was CRR? Everyone has to answer now. How much was SLR? 18%. So 18 plus 4, 22. Out of 100, 22 1. They have to keep it. So they'll be able to give loans worth only 78. Simple terminology. Okay. If this rate from 22 cumulative is increased to 25 cumulative, good for bad for the stock market, bad for the stock market, bad for the fund.